After witnessing a flat growth in October 2022 due to heavy rains, power generation in the country rebounded to double digits in November-December 2022, leading to 8% year-on-year growth in Q3 FY23. While the generation from thermal units rose 7.3% year-on-year during the quarter, renewable energy generation jumped 25%. Going ahead, CRISIL Market Intelligence and Analytics pegs power demand growth in the range of 6 to 7% year-on-year in Q4 FY23. This, it said, would be on the back of the intense cold wave and a pickup in economic activity. The softening prices of coal in international markets, coupled with favorable government policies, are expected to bode well for power stocks.
If you look at the data in the past 3 months, the demand for power in October actually dropped by 2.9%. However, November and December saw strong double-digit growth. This was on back of significant recovery that we saw in the industrial and commercial segment. Now, with Indian manufacturing PMI remaining strong, we expect this buoyancy in power demand to continue, at least in near term. Over medium term, we expect the growth in power to be in mid to high single digits, given the favorable government policies like Power for All and even improving financials of state discoms. On the companies front, the regulated companies should benefit in near term from improving load factors, and over longer term, growth will be led by increasing capacities. Interestingly, while power demand has been strong, the volumes on power exchanges have been sluggish. The international coal prices have cooled off from their peak in September, and we expect the domestic coal prices to follow through. So, with lower spot prices, we expect the power volumes on exchanges to bounce back.
Analysts believe that the rebound in power demand is positive for Tata Power, CESC, and Indian Energy Exchange.
India's power demand grew strongly in the month of November and December, post a muted demand in the month of October due to extended monsoons. Overall, the power consumption in the country grew by almost 8.5% on a YoY basis in Q3 FY23. Higher power demand bodes well for companies like Tata Power, CESC, and also for IEX, which sells the power through exchanges. Having said that, a large part of the power companies' earnings is regulated. They earn a regulated return on equity on their equity capital. Thus, the increase in the power demand is adjusted for the tariffs. Having said that, the strong commercialization plan by NTPC and Tata Power's focus to transform its towards the renewable energy will drive growth for both these companies. We prefer NTPC, Tata Power, and Power Grid in the power sector.
On the bourses, meanwhile, shares of Adani Power, CG Power, NHPC, and NTPC have surged up to 61% so far in FY23. In comparison, the S&P BSE Power Index has climbed around 12%, while the S&P BSE Sensex Index has rallied about 3% during the same period. Today, global cues, earnings season, foreign flows, and crude oil prices will dictate market sentiments.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.